Hey everyone, welcome back to my channel. I'm Caitlin McKegg. I am a realtor here in Phoenix, Arizona, and today I'm here with a Monday market update. I really wanted to be live today, but I do have some client commitments this afternoon, so I wouldn't be able to be live at 4 o'clock. So we're pre-recording today, but hopefully getting back to live maybe next week. So without further ado, let's jump in and talk about what's been going on in the real estate market and the economy as a whole. First of all, if you are new, hit that subscribe button and stay tuned for all of these market updates, news updates, home tours, Phoenix real estate stuff, all of the things I will be sharing. So let's jump right in. Big week. Those CPI numbers, ouch. They came in higher than expected last week. Wall Street tumbles to biggest loss in 2 years following CPI data. Not a good day for the stock market after that. Core CPI, which strips out volatile food and energy prices, increased more than expected, rising to 6.3% from 5.9% in July. Unfortunately, this wasn't great news for the markets. And this week, we're going to be seeing the Fed meeting where they determine how or where they want to raise the federal funds rate. So with the inflation rising by about 0.1%, that does not help the case that the Fed is going to do a smaller hike this month. Couple articles on this. This one talking a little bit more about exactly where we ended. There was something in here that I wanted to mention. Prices rose 8.3% from a year earlier compared to 8.5% in July. Let's see. Economists said that the CPI data cemented the case for a third straight unusually large 0.75 percentage point Fed rate increase at the central bank's meeting next week. So I think from what I've heard, there's about a 20% chance that they could raise it a full percentage point this week. Don't know if that's going to happen. Sounds like that's kind of slim, but this was not good news for rates. The biggest Fed rate hike in 40 years, it could be coming this week. So this article's talking a little bit more about that. The Fed said, we continue to believe markets underappreciate just how entrenched U.S. inflation has become and the magnitude of the response that will likely be required from the Fed to dislodge it. So they're on that same path. They're going to continue to increase the federal funds rate, which will end up affecting mortgage interest rates. We've not seen mortgage interest rates do anything good for buyers lately. They've continued to increase. And with this news, I don't see that getting much better. So how that affects our market is we start to lose buyers out of the home buying market, and therefore our inventory starts to increase. And when inventory is high and demand is low, then you start to see prices fall. So we experienced a lot of this as the market changed in that May timeframe this year. And then things have been pretty stable lately. So today I've got good news and bad news for you. Both came out last week. So let's jump over to the Cromford report and start talking about what's been going on in the local Phoenix market, talking about days of inventory, which is really kind of what I was just mentioning. And I'm going to try to make this a little bit bigger here for everyone to see. So days of inventory is a really good measure that tells us how many homes are on the market relative, so we can track that to see what our inventory really looks like, the health of the market, and that kind of thing. We have 2022 in this like yellowish line here, and a few other years that they put on this chart just so we can compare where we've been over the last 3 years, this being 2019, 2020, and 2021. So all of those in terms of days of inventory are well below where we're at today. And then this line here is 2016, which they put on here because this was a normal market. So this gives you an idea of what inventory should look like in a normal market. So we're not even there yet. Although this climb has been a little bit scary, we're still not in that days of inventory range of a normal market. But with that said, we're starting to see this uptick here. So in the last 2 weeks, if you can see this, just slightly here, this this line is starting to get a little bit steeper. You can see how we kind of plateaued a bit. And so the last few weeks, I've been talking about stability because the CMI has been stable. Our interest rates haven't gone crazy, and the amount of new listings hasn't been crazy either. But in the last 2 weeks, we're starting to see this uptick here. So we're wondering, is this going to go up and meet 2016 and possibly surpass it? Is it going to plateau again? I'm not sure, but 2 weeks is starting to seem like this is kind of a new direction that we're heading. So to keeping this in mind, it's important to know that not only increasing inventory, will start to slow down the market, but if we also start to see fewer buyers in the market because of the effect of interest rates, it's certainly going to slow things down even more. So one thing they do want to point out is that week 38 of 2007, we had, I think I have this here so I can show you, we had 340 days of inventory in 2007. So as a comparison, we're at 73 days of inventory right now. It's very common to hear a lot of people talking about how the sky is falling and there's a crash, or it's the beginning of a crash. Whatever your opinion is, that's fine. But 73 days compared to 340, we have a long way to go to get to that kind of oversupply that we had in 2007. So that's just a nice comparison to look at, I think. The long-term average of days of inventory is 117 days of inventory. So we have a ways to go to get to the long-term average. We're also, we haven't even been close to that in the last 3 years. So good thing to keep an eye on days of inventory. It's another measure of the health of the market, supply, demand, all of that stuff. So let's move on. Let's talk about the CMI. If you are new here, this is the Cromford Market Index, and it is an index that they've created to help us understand supply and demand in our market. And any number that is below 90 is considered a buyer's market. Anything above 110 is considered a seller's market. And then in that 90 to 110 range is a balanced market. So where we're standing today, we are at 105.2. So we are technically in balance. And this is looking at the entire Phoenix, the greater Phoenix area. So technically in balance, although we do have some markets that are buyers markets and we do have some that are sellers markets. So we're kind of all over the map. But our demand has been creeping up just a little bit. That may be going down now that we know rates are not going in a beneficial direction for buyers. So 81 demand, so that means that it's below normal, right? So if 90 to 110 is that normal range, demand is below normal. Supply is also below normal at 77. But these two numbers are so close together that we're technically in a balanced market at 105. We've been hanging around 105, like 105.5, 105.2, right in there for 3 weeks, 4 weeks, I think. This number hasn't been super exciting to report every week. So that's where we're at with the overall CMI. But let's look at where we are at for every city in this CMI. And I'm going to zoom in here so you guys can see this a little bit better. All right, so you'll notice, so here's the good news, right? So the bad news is that inventory has been going up. And when I say good news, bad news, right, I'm talking about, I'm usually relating it to sellers because home values for sellers, that is what indicates the health of a market. So I know all of you who want to find a deal, all of you who want buyer's markets, rooting for a crash to get deals, all of that stuff, that's fine. But the way that we look at the real estate market from a health standpoint is looking at what is positive for sellers or negative for sellers. So that's kind of what it's not a slant. It's just the way that it works when we talk about the market. And that's how Cromford looks at things. So I'm aligned with that as well. So just to kind of explain why I'm saying good news, bad news, right? So bad news for sellers, inventory is going up. Good news for sellers, the CMI is going up on 4 cities this past week as compared to just 2. So it's doubled. So now we have Paradise Valley, Scottsdale, Chandler, and now Tempe all have seen a positive change in their CMI. So that means that those cities have gotten more favorable to be a seller. because either demand has gone up or inventory has gone down. So therefore you can have a little bit more leverage as a seller. Now, all of these are pretty small changes, but it's still the first time that we're seeing this many green arrows on this chart since April or May. Everything has been red for quite a long time. So the average change, let's talk about some numbers here. Monthly average change was -5%. This is another improvement because the week before that monthly average change was actually -9%. So again, another indication of us moving away from that deterioration of the market in this sense. And also the average decline over the last week. So those two numbers are for month over month. If we look week over week, the average decline was only 0.1%. So very small change as compared to the past. We were looking week over week. Those numbers were much, much higher as we fell from a CMI of like 450 to now 105. So we've made some pretty big changes. Goodyear is now in a buyer's market. They just slipped in. They're just under 90, so at 89.4. So if you're a seller there, things are not great for you. If you are looking to buy there, you just got a little bit of a win. So it might be a bit of an easier market for you to get into in Goodyear. And let's see, what else do they have to say about this that I'm missing? As I said, we've got a combination of buyer's markets and seller's markets. So a lot of, let's see, anything under 90. So from Goodyear down, all technically a buyer's market. We have more supply than we have demand in those areas. And then from, let's see, Glendale up to Phoenix, we have balanced markets. And then Cave Creek and up, we have sellers markets. So a combination of a lot of different things. Right now, the bottom three cities, these continue to get worse for sellers. Maricopa, Queen Creek, and Buckeye, definitely getting into some pretty substantial buyers markets, while everything else isn't seeing as much change. So that's where we're at with all of these. They do say, Cromford has been saying that the difference between the strongest markets and the weakest markets is unusually large. Now, they haven't talked more about what that could mean or if we should have some concern about that, but they did say, you know, looking at history, it's a pretty unusual spread between the cities that are the strongest to the cities that are the weakest. All right. Now, I know a lot of you guys really love to know about rental information. So I do have some rental stuff for you. I don't know that I have any visuals though. So I may just be talking through stuff and showing you some numbers. So I think it was a couple weeks ago, I was talking about how we've seen a lot of new rental listings come to market, and that has therefore been changing the amount of, or the rental rates, weakening rental rates out there. Rental weights, can't talk today. And so we've actually seen a 66% increase in new rentals coming to the MLS in the last 4 weeks. Now, keep in mind, the MLS is a last resort for landlords because they have to pay to be on there. And they can just list their rentals on Zillow, apartments.com, all of those places for free, typically, or very, very small. You don't have to hire an agent. But for the MLS, you have to do that. And so landlords are like, for the last few years, like, no, I don't need that kind of help. And now we're seeing so many new rental listings in the MLS. One, because there are more listings, and two, because they're not being rented as easily. So landlords are opting in to list their rental in the MLS. So that's been in the last 4 weeks. We've seen that 66% increase in rental listings. And what we have on the market currently is 157% higher than where we were at with our rentals last year at this time. So that just goes to show how much of a change we've had in rental listings between then and now. It's a pretty massive increase. They say there's also a big downward trend in rents that are being advertised. So these are not the closed rents, but it's what they're listed for. So we've seen a change from, if we look back to July, starting at $1.65 a square foot, then in August, $1.60 per square foot, and now in September, $1.55 per square foot. And I believe that is, yes, the average dollar per square foot is what they're counting there. So with this influx of new listings for rentals, we are definitely seeing those rental rates that are being advertised decrease, which then means that the actual closed lease rates are going to be lower as well, right? So rentals are softening, that's for sure. And I'll keep an eye on that for you guys. And as I get more data as it relates to rentals, I will certainly share that. So that's what I've got, you guys. Got some good news that CMIs are starting to increase in some areas. Got some bad news that our inventory is starting to go up. We're going to have to watch that. And, overall, let's see what the Fed does this week. I don't think it's going to be pretty. And watch those interest rates. If you are looking to buy, stay close with your lender, find out where rates are at, lock in if you can. And if you can't, make sure you just know where it's at, because that is going to affect your payment in a big way if there are big changes in that. So that is my tip for you as a buyer. If you guys have any questions, check the description below. I have a link to set up a time to chat with me. I have a free home valuation. I have a link to search my MLS, and also a free relocation guide. So whatever you need real estate wise, I have you covered. Make sure to check that out. Also subscribe if you have not, and reach out with any questions. As always, I appreciate you guys watching my videos every week. If there is information that you'd like me to cover, drop it in the comments. I will see what I can do, and I hope this is helpful. So I'll be back next week with another market update, and probably later this week with some other info. I'm Caitlin McCagg with the Desert Dreamers team at HomeSmart.